Hello traders, Matt Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Friday the 21st of July 2017 and there's not a lot going on at the moment, so what I'm going to do is provide you with a bit of free love, some training on what to look out for when you are considering an area on a chart where you think there may have been a stop on occur. So let me just explain quickly how all that comes about and what to look out for. So what is a stop on? Well, it's not some sort of nefarious conspiracy theory that, you know, everyone's after your stops, although that is ultimately what transpires. It's more to do with the fact that the process itself just has to work out that way, because big banks and institutions have a if you like, an Achilles heel if they're trading huge size, and that is that they need enough orders on the other side of the market to be able to facilitate that trade. And levels of support and resistance that build up are really great areas where liquidity will start to build up, i.e. stops above and below these structures, right? And where people place stops at levels is a very obvious very obvious thing, right? If you were to ask, I don't know, 1,000 people if you had a level of resistance in this case that had been touched 2 or 3 times, you know, if they were entering in the market on let's say a doji or an engulfing candle, you know, where would they place their stop likely if they were to enter that trade? And the chances are most people stick it just above these structures, okay? And that's why you get this build up of money above and below these structures. Now the other side to this as well is that you do start to get an accumulation of orders building, and it's a function of people being greedy essentially, because someone will often say to me, well, if I sold here at 2, then why am I stopped still here at 3? Didn't I make my money in here, right, and run? By which case, if you'd place your stop above this level, obviously closer right in here, if you place your stop above that level, you know, you should have bounced. If as price comes back into that level, yes, correct, your stop hasn't carried forward. But the reality is people are ultimately greedy, and not everyone, but that's just a fact for many. And if you were in this trade short, you saw some money in the trade, but then you saw it come back against you, you know, it's back to break even, you're thinking, oh man, why didn't I get out? And then it starts to sell off again. You know, you'll remain in that position hoping that prices will follow through. Not only will your stop be there'll be some residual stops from those previous trade entrants as well, for the same reason. Less so because obviously if you made money and then you gave it all back, you would have a severe talking to yourself about that. And as price went to the similar levels where you'd missed out on the profit previously, if you sold in here, you know, you're probably more likely to bounce and exit out of that trade at that point and take your profit. Now if you do that, obviously there isn't that carryover into the next the next level, etc. But there will be some who've made that same mistake twice and cannot believe that they've done it again, and their stops are residing at that level. Now of course the further back you go, the longer the level is, the least likely that is, because obviously, you know, people have plenty of chances to bail out of those positions. It's the nearest levels, the nearest touches to the current touch, where you're going to get that if you like, that rollover of residual liquidity at the level. And of course the more levels touched, the stronger it gets. The more levels touched, the more obvious it becomes. So you get more eyeballs on it. If there's more eyeballs on it, more people will take it. More people take it, then ultimately there are going to be more stops that are there this time around. So this is and obviously that feeds into the narrative that the more levels touched, the stronger it gets. So people are keen to jumping off these levels. So you level traders, support resistance traders, etc. Pull the trigger and take some risk. And this is very, as I say, this is very obvious behavior what you're doing. If you don't realize it, it's very, very obvious. So you have an area in here that would have looked like it was really going to sell off, right? If this is the hard right edge of the chart, which is what we all have, if we discount everything that's come after it, right? None of this had occurred. This looks like a damn good short. A beautiful candle pattern into the level. It's a slam dunk sell. You place your stop above the level, and you're in. And your target is probably on the other side of that range or beyond. Now, as I say, that's very obvious behavior. So then when price actually starts to turn and go up against your position, right, this is where traders obviously get squeezed, and maybe they didn't get stopped out there, but it allowed for more people to go short in here off the top of that level, but they all got stopped out either in that first move or that break pullback. Obviously this move up here cleaned the clocks of any stops up to that point that was in between this area here. And the reality is, been proven many times that that stops cluster at levels. So you get the build up of stops where price is located on a chart right at those swing points, the biggest amount of density of those stops. And it makes sense, right? People are trying to manage risk. People have daily ranges. A lot of people are trying to day trade, so it's no use having a stop a million miles away if your daily range is euro 60 pips. There is obviously an argument for being out of the way so you don't get stopped out, right, and you become more profitable that way. But most people aren't thinking in those terms. Most people don't like big stop losses. Most people are trying to pinch off, nip off those perfect little entries, and as a result of that they cluster around these structures. So you will have stops obviously that are more sporadic, but they are further out, they are further away. There's not as many of those. The clustering is around the structures, and obviously this is the same for in here and in here too. So what I'm trying to get at is this is a huge stop hunt, but it also has a couple of other functions as well. Stop hunts can morph into iceberg orders. Iceberg orders are complex stop hunts, and if you want to learn a bit more about how to spot these unusual little known orders, then click on the link below. Come and join me in my inner circle. I'll explain them in detail. But what happens when price actually breaks up out through that level? Yes, it's a stop hunt, but it's also something else. It's also a trade entry for many traders, right? If you've got yourself a very defined level of resistance and price breaks up through that, what type of trader is going long as price breaks up through a level that's been hit several times, it's nice and defined, and then it finally pops on the fourth or fifth go? Who goes long? You've got to ask yourself that question. Well, there are several different types of traders that go long in there, and what is that ultimately doing? What is that providing the ability for the institutions to do? Well, if people are willingly coming in and buying, that's allowing something massive to come in and sell in the face of that buying, and a sell-off from there is no real surprise. And price does come back up to the level, but it's massively sold off since then. Doesn't go beyond that order. You wouldn't expect it to. If you were right in your analysis and you understand the order flow at these levels, then you would know that the chances of that actually coming back and breaching beyond this point are slim, because something big has just done a load of selling, and they're not going to come back for you, with all due respect, minuscule order just for the sake of trying to pick up that tiny amount of money, right? They've done their business in vast quantities, and now it's time for that to fully play out. But if you'd like to understand how we view the markets in any other world, this is broken out by anybody's standard, this price action in here. But reality is, this could be 100 pips. I don't care. It hadn't broken out, and I can show you how to tell the difference and not get caught into the stop hunt itself, so you get spanked. Because if you went short of this level, you didn't do the wrong thing. Price is now down in here. The problem is you didn't realize that you were setting yourself up to be nailed by the institutions. Likewise, if you didn't get caught in that, but you got caught in here, then you got creamed too. So again, you place your stops below there and you've been nailed as well. So to stop yourself getting involved in these sort of screw trades that nail people on both sides, I can teach you how to do that, but you need to click on the link below. Take care.